Hello, this is Steve Malone with CompuSaveX. Hope you're doing well today and again some good trades. In a recent video I talked about a little known technique that some professional traders use to identify tomorrow's trend today. I talked about how you simply use the average daily range and you use two standard deviation channels. One standard deviation channel you set the deviation to 1 and the second standard deviation you set to 1.62. Now since doing this video I've received a number of emails. Some of the emails talk about how amazing this little technique is in identifying where the market can potentially go. In some other emails I've had questions related to the Traders Dynamic Index and related to the average daily range. So I want to answer those questions in today's video, but I also want to show you how the market has moved related to this technique. Now take a look at the average daily range pro calculator by CompuSaveX. The average daily range over the last 5 days has been 68 pips. So what I want is my inside channel to be fairly close to that, and from top to bottom here it's about 62 pips, fairly close. And I'm going back 5 days with my standard deviation channel just as I'm doing a 5-day average daily range here. Now again, I do all this on a 1-hour chart, makes it a lot easier to see the big picture. Now what I want to show you is that I've already set this up and I want to just see what took place today using this technique. And if I move forward, you can see how the market played out. From the start of the day, the market moved up just at the top of the range, then fell back to the center point of the range, almost up to the top of the inside channel, back down, and here we sit right now. Now one of the questions I've received is, Dean, how does this relate to the Traders Dynamic Index? Well, as we know with the Traders Dynamic Index, when price action and market sentiment identified by the Traders Dynamic Index, when they're both moving the same direction, you have alignment. So as the market was coming off of this low point here and bouncing back up, we're looking to see, is market sentiment moving that direction? And yes, it is. In this case, we have targets now based upon this little standard deviation channel technique. Let's go take a look at the dollar CAD. Take a look at the dollar CAD, you can see that it moved today in the same range using a deviation of 1.0 on the first channel and a deviation of 1.62 in the second channel. And from top to bottom here, you can see here it's about 82 pips, a little bit more than the 69 pips that we have here, but fairly close, and we can see that the market over the last 5 days has pretty well moved in this range. Today it stayed fairly close to this one, moved up to this level, trying to do a pin high today, and I was looking for the market to roll over, and that's exactly what the market did today. In my live active trade room today, I shorted the CAD looking for it to fall back down after it did a pin high coming near the top of this channel here. And look below here, the Traders Dynamic Index was showing a double top and it rolled over, and I talked about that in my live active trade room. Now another question has been, well, Dean, using the standard deviation set to 1, from time to time, the average daily range does not match this inside channel. Have you noticed it, and have you made a change to that? Well, yes, I have. If you take a look at the euro dollar here, you can see the euro dollar has been a fairly tight range the last 5 days. And so looking at what was happening potentially for today, what I simply did was I looked at my average daily range, which is 98 pips. I changed my standard deviation in the inside channel from 1 to 0.62, which matches the fib retracement level of 0.618. From top to bottom here, this is right at 98 pips. It matches the ADR. And look what the market did today. The market literally stayed in a downtrend based upon this technique, and it stayed right within this level here. Now I do expect a breakout. And I do expect if there's a breakout here that we're going to either test these lows. Look here, if the market comes down and gives us a double bottom here, look what we have. It comes right down the bottom of this channel here, potentially giving us a double bottom for a bounce up. Or if we break here, look for it to drop down, and some are looking for this to potentially move down, back down towards 2950 level, which is going to be right in this area. Then we test 129. Once we break the barrier of 129 or go below that, then we're looking at possibly testing into the high 128 level. Okay, and you can see what's going on with the Traders Dynamic Index. We had a little double bottom here today and it pushed up. we saw the double bottom right off the channel here on the inside. Also, you can see what happened on the dollar Swiss. Again, a real tight range we experienced over the last few days. I tightened my deviation 0.62 on the inside channel, 1.27 on the outside channel, and look what we have here. Also, the average daily range over the last 5 days has been 69 pips, and from top to bottom here, this comes in at 67, 68 pips. Right match to my average daily range over the last 5 days. Now, if you don't have the average daily range pro calculator from CompassFX, you can go to www.compassfx.com/ADR. This average daily range calculator was developed very similarly to tools used on Wall Street, and it only uses price to determine the levels. So looking at tomorrow, what I'm going to do is I'm going to move my channels a bit this way. I'm going to move to the close of today, or the open of tomorrow, right there. And now I already have everything set for what could potentially happen tomorrow. So as we look at what the market could potentially do tomorrow with the dollar Swiss, is I'm set and prepared to go. Again, the vertical line here shows 5 days going back, and I've got this deviation. If the market stays fairly tight, I look for the market to bounce up in here. If the market comes back down based upon this deviation factor, I look for it to stay along this level right here. Now, in the event that this gets challenged, then I can step in and I can look for a deviation that may be higher. I'll start with 1.62, as we talked about previously. Now, at this point, this goes back a few days and where the market was right in this area across. If the market proceeds a little bit further back or further higher, then we'll look for that standard deviation to be at 2.62. The 2.62 deviation is the maximum deviation that these professional traders used. So maximum tomorrow is the potential for the market to go up in this 93.70 to 93.85 area tomorrow. The minimum we would see is the market going down to about the 91.15 area up towards the 91.45 area. That'd be the maximum channel size we would look for. Well, folks, this is the technique that I learned from some professional traders as far as identifying the trend tomorrow. We've seen that the market has a tendency to stay within these channels. Use this technique as you trade to help you identify what can potentially happen. If the market gets fairly tight and the average daily range gets a little bit tighter than the normal deviation of 1 or 1.27 for the inside channel, you might try 0.62 for the inside channel, and you might attempt the deviation of 1.27 for the second standard deviation channel. Well, folks, Steve Malone with CompassFX. Hope some of this information will help you in your forthcoming trades. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.